Good evening, guys. Ken at Tortoise Capital with the nightly strategy podcast for July 22nd, 2020. Well, it was a hot one at the soccer fields tonight. Man, oh man. Girls are working hard. We incorporated a couple new players from the military families that have arrived for the annual course. So we're getting sorted out. Today was just a strategic victory for me. For 4 or 5 years, I have been battling giants in order to get our comprehensive final exam um, to be done like a genuine graduate school defensive thesis, where you start with a couple well-known broad questions and then engage in a professional scholarly discussion that probes their boundaries for an hour or for 90 minutes, and you go where the conversation needs to, but you engage in a free-form yet disciplined approach. Well, that's what it should have been. What it has been instead was a compliance inspection based on distrust and an excess of fact-based objectivity. And it was a brutal, stupid evaluation system, which was putting all kinds of stress on students to answer stupid questions with faculty that weren't prepared for that kind of engagement, and which was different than the style that we taught through the whole year. So the final exam had nothing to do with the material or the way we taught it in general in the classroom, and it reinforced feelings of distrust and disgust. And so me and a couple other guys have been fighting hard against that for 4 or 5 years, and we've been able to make some minor changes. But today, the commanding general, who just gave up command to move on to the Army War College, and then his final act upon departure was to basically implement the graduate style final exam that this sort of working group had put together to bring us more in line with what we say we are, which is trying to be a professional graduate school. And I don't know if it's because he listened to us or because the COVID has made any other method impossible, but I think it's because he listened to us where previous leaders didn't. And we got everything we wanted. And I opened up the decision briefing and looked at it, and it was like 200 pounds just came out of my rucksack. And I had to send him a note. He's already moved on to his new assignment. I had to send him a note and said, "Hey, sir, thanks. The guys in the white hats finally won one, and appreciate the courage that it took to make that decision against the recommendations of some other people on the staff who were really satisfied with the way that it was being done." The way those people tended to be folks who were not in the classroom and teaching every day, but who had some kind of unsupported notion that the faculty were not to be trusted and that the students were lazy and incompetent, a very much theory X kind of motivation, which is the opposite of what these guys really are. And it's the opposite kind of a program, according to the Army leadership model, where you're trying to encourage confidence and trust and collaboration. So the angels of our better nature won, and it was just a sense of gratification for having continued to fight the fight and chipping away at it. And I also sent a note of apology, but not really, to my intermediate bosses who've been supporting us all along the way. So thanks for putting up with the noise and grief that we've been giving you by pushing back against this old style evaluation. So, sometimes you just got to keep going for it and pressing on and fight your way through it. And I don't know that the principles of positive psychology fully prepare you for that? Well, I think a misunderstanding of positive psychology would be to say, hey, disregard the negativity. I don't think that's what positive psychology says. The more and more I study that, as I'm preparing to add that to our coaching program. Positive psychology says emphasize those things that lead to success and build upon the positive qualities of your nature and of the possibilities of a group. It doesn't say discount genuine opposition to your ideas, because remember, men of good faith and goodwill can have different positions on an issue. It's not black or white. That's part of a nuanced appreciation for the complexity of the world, is to say that there's more than one way to get through the woods, and that you can have disagreements. And so you got to take into account, all the elements that are in play in the environment. So today was just a really gratifying day at work. There was now there's this great big void, because I was geared up, getting ready to fight this fight again with the new boss, in the year ahead, because we rotate generals about every year or 2 years. So we keep having to have this fight. And the mandarins up in the staff are the ones who are the continuity, who have been successful in the past of persuading people to continue in the old way. Well, there's a power to the status quo that comes from the fact that the status quo has been very successful so far. I mean, we're still here. So you can't disregard the fact that the status quo is the status quo for a lot of good reasons. It represented, the best trade-off that we could make at a certain time. And yeah, things change, but you can't just say, oh, well, there's no, we can just discard that. You do that at your peril. There's a reason why that's the energy state that things settled in, because it was at least stable. So that's part of our job all the time in the development of craft knowledge, is trying to figure out what of the status quo should be discarded, what should be maintained, what should be emphasized, what should be added, and when are things in the prototype stage or in the investigation stage good enough to be ready for action. If you think about it, that's a discussion that we had earlier this week about your first inclination versus your professional recommendation. I actually had that conversation with my high school players tonight. Just while we were in cool down mode, I was talking to them about what bosses are looking for, what people are looking for, is your thoughtful recommendation after you've done your due diligence. That's what your trade is looking for. It's looking for the action you're going to take after you fully framed it and committed to it, not just, well, let me try this, see what happens. You got to do more than that, if you want to survive and thrive. So today was just a really good day at work. And then I got invited to participate in this global innovation workshop out of University of Chicago. One of my previous students who went on to work as a strategic fellow in the Pentagon, and then who went out to work with industry in a grad school at University of Chicago, talked to his professors who were putting together this global consortium on improved decision making under conditions of uncertainty. Does that ring a bell? And so he showed them some of our work on what we're doing and the way we understand strategic, operational, and tactical, and how to handle uncertainty and yet take effective action, and then how to build those skills for effective decision making that can iterate and scale and be leveraged, and yet is adaptable at the same time. So they're very interested in what we're doing from a theoretical perspective. And there's a pretty interesting group of people being assembled for that. There's some White House cabinet level staffers, like primary staff to a cabinet secretary from a previous administration, is on that team. And so there's going to be some pretty interesting people in that room, and as we explore different ways of, thinking about decision making with a bias towards problem solving in the real world that can survive contact and then iterate, as opposed to the preconditions of critical thinking and creativity and speculative inquiry and research and development, all that. At some point, those things have to be examined critically and matured to the point where you can commit significant resources to it in order to solve really large problems. Like, you can't solve really big problems by nibbling around the edges unless you have an infinite amount of time. At some point in the areas of public policy and whatnot, you gotta do more than just nibble. You have to commit. So I'm really excited to see where this may go, and I'm going to try to talk about some of the principles I've learned from true storytelling and some of the work that we do in here about our decision making and the principles of hybrid trading as a model, as a metaphor for the kinds of decisions that folks have to engage in other areas, not just in managing funds. But if you think about executive decisions in large organizations, it's really about portfolio management, where you're combining different signals and systems and allocating organizational capital to solving problems in an environment that is itself dynamic and adaptive. So I'm really looking forward to the idea. And it's kind of interesting. They're using Basecamp and Campfire as a way to conduct the global collaboration. So I already know that I like these guys. I'll keep you posted. And there may be some things that I can learn that we can shed some light on what we're doing. So just want you to know that what you're grappling with is really central to the challenges in the modern world of making decisions in a really dynamic environment in which we're not really sure that the old models have the same validity as they once might have. Doesn't mean we just get rid of them, but it takes a little more. So let's see where we are today. I should note the big news was after the close, Tesla announced and they blew away earnings expectations and actually made money. And they're up 5% in the aftermarket, which is pretty amazing. It's now the most valuable car company in the world, in spite of the fact that they've sold less than half of 1% of all cars sold worldwide. Like, they sold 350,000 units this year in a world in which 90 million vehicles were sold. So they're 1/3 of 1% of the market in terms of sales, but they're more valuable right now on a capital basis than Toyota and Ford and Volkswagen and Mercedes. Figure that out. I think that's the market, what I heard today called the democratization of the market, which is not as concerned with the quarterly results that are how the professional staff accounts for and grades, the management team. So there's really a focus on that quarterly and annual results, whereas a truly democratized market might actually be smarter in the fact that it's looking at longer term potential of Tesla. And that was part of our discussion last night, thinking about Tesla, reframing Tesla not as a car company, but as positioned for a much broader integrated solution provider to a lot of problems, not just transportation, but also at the root of energy production and storage. My concern on Tesla is how vulnerable are they to the health of Elon Musk, his mental and physical health. So that's the interesting news that's in my mind there. So I think tomorrow we're going to see how the market reacts to that surge in the aftermarket. I'll be ready to trade that hybrid frog tomorrow, both directions. So let's see what we did today. Yesterday, the market pushed to a new 10 and 30-day high and then sold off, but on a very narrow range, and closed strongly above the previous day's high. Today, there was a micro gap down, and it pushed all the way back through yesterday's high to make a fractionally higher 10-day high and 30-day high, and closed very well. So that was a very strong move today, a quietly confident move. And I still think there was probably some hesitation to see what, Tesla and Microsoft's earnings would be. But that's a pretty good move for the day, a very narrow range, but a strong directional signal, and push to a new 10-day high and 30-day high. That's what that grinding upward cautious optimism feels like. The 10-day regression line looks like that and looks very strong. And with this solid base of the last 4 days of that 10-day period are all down in here. So if this keeps going high, this 10-period regression line is just going to keep getting steeper and steeper, as it goes like this. So there's more room for this to the upside for sure. This is not a parabolic move yet. The 10-day range going from 327 and a quarter, 327, and then the 10-day low at 310 and a half. So that's a 5% range from high to low. We will see that the 10-day low is getting pretty close, or the Bollinger Band mean is leaving the 10-day low behind. So that's pretty solid. The dragon has been nice and strong here. And the extension just looks really, really powerful. And so the upper skin of the dragon, lower skin of the dragon, and then the spine of the dragon, all signs point to up with him. Thank you, Mr. Dragon. The PSAR is solid. It flipped 15 days ago and has been marching straight up in these measured chunks. And so the upward extension is still favorable. It's parallel to the dragon. And then notice that the 30, which is the health of the trend, is an even stronger move. When you see that, that tells you there are some legs on this, that is some longer term improvements happening when the 30 period extension is improving, and it's even stronger than the 10 period extension. That's really good. So there's our regression line there. The that baby dragon is like right there at the edge. He's paralleling the skin of the mama dragon, so off they go. The low of the day, which was open, the low of the day was the open and then took off, is well above the dragon skin and the baby dragon. There's 4 seasons of MACD is solidly in the summer. It's pushing the Z2 line right here. Here's Z1, there's Z2. So it's still comfortably in between Z1 and Z2, but now pushing that upper limit. So the upside, at this rate tomorrow, get another one of these directional kinds of days, like the last 6. Then the RL90 is in sight at 330.5. And then Z3 is 2 steps ahead at 334. We've left behind the peak RL270 fair value. All systems go. The president's announcement about a contract with Pfizer for some development of COVID virus vaccines. That'll be an interesting to watch tomorrow as well. That's been lagging. So Pfizer and the whole healthcare side will look interesting tomorrow. So let's take a look at the downside frame. Low of the day at about 324.5. Skin of the dragon at 322.5. The spine and the Z1 at about call it 321 even. That was also like the previous peak of the RL10 over here. The bottom skin of the dragon at 318.75. The PSAR all the way back here at 315. So that's like $8. That's almost 3% sell-off that it would take to get from the low of the day all the way down to the PSAR. And then it's another couple bucks down to the Bollinger Band mean. So that's almost 4.5% to the Bollinger Band mean, and then the 10-day low at 310. Z1 long current fair value. That's how strong this move has been. It's been able to move from 302 all the way up here to 327. God, it's like 8% off above that fair value. And then Z -2. That's actually a move that is worth preserving. Think back to this time here when the RL90 and the RL10 had just crossed the Bollinger Band mean. This was that moment when the RL30 kind of bottomed out, and then the RL30 started pulling away from the SMA 30. So you're starting to see that accelerated move. This is a really strong signal. When that RL30 doesn't even get below the 30 period, that acts like a support level. So we keep that in mind for our heuristics. And then finally, all the way down to the 30-day low. So that's a pretty good day at work right there. Cautiously optimistic. Up we go. Let's see what worked today. So the S&P was up 0.57. Diamonds were slightly better at 0.61. IWM lagged today at 0.05. So it was more about the large caps receiving the money today. So let's see what sectors were better. There's XLK. So the market is at 0.57, XLK at 0.8. Discretionary 0.86, that's healthy. Healthcare 0.9. Materials 0.11. Pretty amazing. Wheat and precious metals and silver had a 9% day today. And wheat was up another 2%. Brazil, way up at the top here at 2.5. Virgin Galactic 2.4. The triple or the double inverse energy up 2.7. Tesla was up 1.5, but then added another 5% in the aftermarket. So it's well above 1,600. It's above 1,650 right now. There's Mexico and Brazil. Home Depot just continuing to grind. Even Treasuries had a gain though. So I think that's playing the longer term. Wheat and precious and Treasuries, that's folks buying those that are buying insurance and building positions when those things are out of favor. As everybody's running to buy the Teslas. There's Microsoft at 1.4, better than the triple Qs, which is at 1.1. But notice that, TECL, the broad tech sector, is beating the TQs. All right. So what was weaker today? Well, Apple, Walmart, about up a quarter. Finance flat. Twitter down. Japan, EEM down. Now this is interesting that U.S. Steel and Alcoa and Cliff are all in the red when XLB was in the green. So there's some lagging there in the metals. Facebook, Amazon did not participate in the joy today. Win and Nikola Motors. So Nikola is just another 8% drop. So that's still some of that reaction to the that big block of shares that came out of lockdown, and that's people cashing in while they can. So Nikola, I think, got pumped up because people were pimping it as an alternative to Tesla. Hey, buy Nikola, it's just like Tesla, only $50 a share. And now suddenly when all that IPO stock comes out of lockdown, they can't wait to offload that at $50, and so it's dropped to 36. So when the smoke clears and the volatility begins to compress, we can maybe discover what the genuine real price of it is and then start thinking about the long side. Goldman did not follow through to the upside, so it was down minus 2.8. On a day when finance was flat, Goldman was horrible. So let's keep that in mind. And then Win was its usual miserable self. So I still think the emphasis on the core being off the table for risk is correct. And I'm going to maintain that position until November because of reasons. And I am dipping my toes in the water on the swings, and I'm still primarily a intraday trader on these big percentage movers. But I'm now open to the possibilities of selective swing trading. I want to take a look at the daily. So here we go. We've already seen that one. Okay. Upper half of page 3 here. So bullish normal, that's good. Everything overbought, that's good. 5.7% above sideways, that's good. The ADX is slowly improving. It's now up to 13.8. That's good. Just normalish ATR. When that ADX reading gets above 15, then it will no longer be a weak trend. That's what this little between 15 and 25 is kind of normalish trends. So if it goes below 15 and then reverses and starts coming up, when it passes through 15, whichever trend is in the lead, that's the trend. So we're seeing that as the bull right now, and that's reinforced by this risk Z, in the spring and now in the summer, and it just went above 1.0 on the Z score and became abnormally strong, so that's good. Now that can last a good long while, and it's this run up right now. Once it gets out of that normal range, between 0 and +1, that's that range of normal right in there. That's where it really can start taking off. So I'm looking for more volatile moves to occur now. And the emerging trend is up, so I think that's the way to be ready to go. Now you'll notice there were no signals in overreaction, but a lot more symbols are now above their 200-day moving average. Last week, only the S&P and the Qs were, but now everything except emerging markets and ILF are. ILF is the clear weak spot among the big regional ETF and indices. So that's if we see the S&P becoming weak, then if ILF is weaker, that's the target for shorting. Min pain and max pain. So the min pains are the ones that are leading the way north. No surprise there. Home Depot, Coke. 10-day max pain, the opportunity trades in the Dow, Goldman, Boeing, ExxonMobil. You ought to see the trade frame Danny put together for the TC bundle and his options course. He smashed it with Virgin Galactic, that SPCE trade. You need to go to klbundles.com and listen to the way he crushed it with swing trade options. Wow. So the next longer term target that we're looking at is Walgreens, because that has a huge difference between the rebound in the market and the performance of Walgreens. And Walgreens looks like it's established a base. And so that has now become like a Z3 pinch at the bottom of a period of significant underperformance. So that is a low risk idea on a recovery play, sort of like a catfish, bottom feeder. Nowhere to go but up. At those price ranges, I'm surprised Amazon doesn't just buy them. Why wouldn't you? In terms of a distribution outlet. So who's going to buy them, Walmart or Amazon? I don't know. You can still buy Amazon and Simon Property Group on sale. And then there's still Goldman. Dow 30 tactical summary. Handful of dojis today. I would have thought there'd have been more, as narrowly, given the narrow range of the market itself. Still only Goldman testing out well on the auto framer. And remember, that's a function of how close to the 10-day high everything is. And when everything's close to the 10-day high and only Goldman is that far away, you don't get the kind of 2-to-1 requirement for swing trading that you need to have a good number in the auto framer. So Goldman and ExxonMobil both stand out as the weak areas. So yesterday energy was amazing and awesome. Today, not so much. It was horrible and terrible. Pfizer, almost as if people knew that they were going to get a contract for COVID. And today was their breakout. So Pfizer is a follow through. McDonald's and Coke. Sure, why not? I like that. I like those numbers there in Coca-Cola. The 1 day to the 3 month are all pretty good, but it's getting an accelerated performance on the 1 day and the 10 day. So take a look at that. On the 1 day, it's 2.7. So it's in the green. That means compared to everything in the stack, it was exceptionally strong, more than one standard deviation better than the other members of the Dow. That's why it gets color-coded in green, and that's why that symbol gives us a green traffic signal. Goldman gets a red traffic signal because its performance of minus 2.84 is more than one standard deviation below the population average. So here's the interesting notice on Coke. It's outperforming on the 1 day and the 10 day, and it's just average performance on the 1 month and the 3 months. So what that tells me is that the outperformance of Coke is a recent phenomenon and it is accelerating. That's good. That's real good. And then Pfizer has been outperforming for 1 day, 10 days, and 1 month. And today had a breakout. So that's kind of a no-brainer. And now this is the difference between a strategy and a system. So all of these swing systems here have very specific rule sets: channeling, overreaction, washout, 5-day down, triple screen, 551W. Those all have very explicit rule sets that if you don't meet the criteria, they don't fire. And yet, a strategic approach, looking for the anomalies, the outliers, gives us interesting insights about Pfizer and Coke, just as things to notice. And then similar, if you take a look at Boeing and its unique story, look how it has been horrible and great and horrible. It's been much more responsive to the waves of political graft and corruption that comes its way as opposed to its fundamentals. And now notice both Apple and Microsoft have this same kind of pattern. Apple has been brilliant, 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 horrible on the 10-day. And Microsoft has been brilliant, brilliant, good, good, horrible on the 10-day. And yet both of these had a bit of a rebound, and Microsoft was better. So this 10-day sell-off is like the dip. So you have the great outperformance, strong trend up, a short-term dip, and now maybe the beginning of a recovery. And it's number one on the max pain range compression, even though it doesn't test out well. Microsoft is very interesting to me. And so Apple, being a top 5 guy, is also interesting to me for that very reason. Microsoft has the advantage of firing on a triple screen and a 551W, so we automatically know that should be looked at. Okay. That's a must frame. You may recall this was the frame we did over the weekend where we saw that little block, and then we framed that last day here, and then you get this breakout. Then the top of this box that we saw before, we said that was the reasonable move, and it's already made that reasonable move up into here on the first day, and then it sold off, and then today was another bump up, and now it's cleared the dragon. So now this looks to me like an opportunity to add to it again. So if it can break out of that box, then you would expect it could get above this box. That's the next box. And then if it gets above there, it's free and clear, no resistance, all the way up at least to Z3. So that's a upside target of 226 is not crazy. The risk box on that is probably, starting about here down to the Bollinger Band mean. And then if that breaks, if the Bollinger Band mean breaks, then that nice run that took it up to 217 is over, and then it's more like then this previous cluster is the next target to the downside. And then if fair value breaks, then it's way back to here into that region. So I like Microsoft there. That's pretty cool. Apple, it's running, buddy, even better. That's just so steadily good to go that I think you just buy it. Especially if it breaks out of that box, you just buy that. Psh, don't have to think hard. And Home Depot, man, that's what we said over in here. And up it went. Still going. Where's the next target on that thing? Z3. And this Z3 push. Those are the two upside targets. So if I were just buying it tomorrow, I'd have my stop right there. And off you go. If I had bought it anywhere from the big green circle of the supported spring crossing, this is where my stop would be right here, 1 day low. That's at the Z2 mark. And I wouldn't be offended if you were up there, but at least right there. Give it some room. That's just going to go tomorrow. Pfizer. Oh. Oh. Wow. You might recognize that as the supported spring crossing. You might also notice this as a supported spring crossing. This back here, notice that lagging PSAR stop. I just want to highlight that. This is the main idea behind that breakout. When you see that when the PSAR when that PSAR flips, that lagging of 2, right where that green dot is, that tells you that a reasonable entry was anywhere in this bar, certainly that bar, and your stop would still be down here at the PSAR flip. So if you could get anywhere in here, and let's just say you got that, or you butt in the middle of that bar. Man, that's so good. The other thing to notice is the power of this PSAR stop on the dailies is good. Intraday, that thing moves so much that the Wu Wei exit that lets it get going before it gets above your entry protects you against these kinds of quick sell-offs. Sometimes a quick reversal gets you in, and then there's a quick wave 1 sell-off, and it still holds, but sometimes might hit the rising PSAR, but never comes down and violates the original flip. That's why this entering at the second dot from the end makes pretty interesting moves. This one becomes a universal entry at the orange dot here, where it opened inside this. So if that's the sell-off, and now it opened inside the previous bar's candle, and then takes out the high, that's really good. And then notice the behavior of the RL10, which rolled over and then started zooming up. So that's a pretty good, even if you don't get the green dot, that's a really good entry right there. And this one is good too. And then anything in there Oh, that's easy now. It's the summer. Psh, too easy. So even if you got the orange dot here, you're happy with Pfizer. And now onto the upside, it just broke above Z3. Let's see what it's doing in the post market. It's even better. Yeah, it took out the Z3 in the aftermarket. So Pfizer is just going to go tomorrow. So the upside to that is going to be the previous, like Z2. Man, this thing's going. It's already above the Dragon hump, and it's above the RL10 hump. Psh, off it goes. Next target is up in this cluster at 40. Just going to move all this crap out of the way. Next target is 40, and off it goes. That'll make that tomorrow. On a longer term basis, this is what we like to, you have a sell off, so you have a low at that turning point, recovery, higher low, and taken off. And then when it takes out this piece, so now what we're about to test is whether it can break. It just actually broke that previous hump, right? So this hump here, it just broke that. So now the next target's going to be this one up here. And now what you have is a 1, 2, 3, 4 breakout that way. So what this, when you have this high, low, lower high, that makes this collapsing dragon really strong because you had lower highs. And then your target from here was to come down and test this, but it didn't get that far. It only got 2/3 of the way and then reversed. So when it reverses here at higher level than it does here, now you can say from here, my target is this high. And then if it breaks through, it's coming to the next high. So now just using kind of trade geometry, we can start marking out the boundaries of these various pieces of scaffolding and turning points. And so the turning points of the dragon, that hump of the dragon and the belly of the dragon, really become important. Look how nice and smooth the RL30 is, though. So the RL30, I want to point out here, we call that the RL30 is the health of the trend. Look how smooth that turn is. When the RL30 turns, that's decisive, right? And that's why when you're trading the owl pattern, the owl has to see, that nice unambiguous move, and then the P1, and then the RLXD, fine. But then it has to see the dragon turn, and then the fifth criteria is the RL30 has to turn. That's what makes this orange dot an owl entry, because it gives up some of the earliest moves, but that becomes decisive. So when you watch the RL30, and then when it turns, that's a decisive. Horrible until it reverses the other way, and that's decisive in here. So what you want to compare is the simple moving average of the Bollinger Band mean. That's a simple moving 30. And then the more exaggerated but also smooth moves of the RL30. So let's take a look at these as, at key turning points. When the that's the maximum excursion weight. Here was a moment when the RL30 crossed the Bollinger Band mean. Before that, everything was up. And then here the RL30 crosses the Bollinger Band mean, and it stays that way all the way down this stack. And here it reverses. And by the time it had sold off that much, the Bollinger Band mean had come this far. Now, it didn't belly out till it got to here. But now notice at this blue dot, the first blue dot is where the RL30 went below the simple moving average, the middle of the river. And then you had it unfolded into this powerful downward move, into this powerful downward. And then when the RL30 reverses, the owl gets you an entry right about here on the green dot. The supported spring crossing probably enters somewhere in here. But that's the owl because the RL30 has reversed back up. So on these longer term time frames, when you start looking for these major turning points, the owl is your friend. Now notice that the next time it crosses is here. And so you'd like to be short, following the owl for directionality. In here, all the way down until here. And now suddenly you have the owl up in here. And you have the RL30 crossed the Bollinger Band mean here, and now everything is up and good. So a lot of things happening on that. But those are like the major turning points on the interstate highway. Those very significant turning points of the RL30, the Dragon, and then noticing the relationship between the RL30 and the SMA30. So I talk about that way back in the boot camp videos about the relationship between the Dragon and the river. That's the SMA10 and the SMA30. That's what gives us the MACD histogram, by the way. But then I also talk about the relationship between the RL10 and the RL30. That gives us the RLCO framework. But then you can compare the 10s. When the RL10 crosses the Dragon after a big move, that's where you get that supported spring crossing or supported fall crossing. And then when the 30 crosses the 30, the regression line crosses the simple, you get a change of the seasons or a change of those tidal forces. So reflect upon that lesson. Anyway, that's what Pfizer's helping us understand. And every symbol you look at has that same kind of relationship. If I were to look at Brazil, that looks pretty good. It's just about ready to do a Z3 breakout. It held support way down here in this tight little cluster, you may recall. We talked about this being the breakout. Bam. So you should be long at 31.75. It went all the way up to what we said was the upside target of the Z3 at 33.50. That's an 8% move and running away with it. Frame these trades. I mean, you got to make that call. You got to be able to see that potential back when it looks like this. That's what we said. That's when we drew that upper black box. This doji was buyable. Not only was this thing buyable here on the crossing of the Dragon, but that thing was buyable on the breakout of this box. And if you didn't get that, you could have got it on this breakout of that box. Do what you want to do. You got to work. Now here's what we said on Wheaton. back here at 43. Go back and listen to the July 6th podcast and speed run. And then go to this weekend and listen to what we talked about, framing this as a breakout, up, breakout, and off it goes. Pushing beyond the previous Z3 almost. You don't think that's a significant, that's a change of an era in gold and silver as a protection against this. That's professional money betting against the retail purchasers who are pumping this thing beyond belief. All right, that's enough of that. Nikola Motors. This is where we said, on this orange dot, this is where we said, you know, if it breaks below this yellow box, we'd be short. Yeah, we'd be short about 64, and it's at 36, so that's 50%. And gonna fail further. This is back when everybody thought it was the next Tesla. Oops, not so much. Fools and their money. But again, that thing can go in both directions. Look at that little bottleneck, that Z3 breakout and another breakout and another supported fall crossing. Talked about Goldman yesterday and set that frame. That's the box we framed yesterday. It broke down. So we should be short that at 210 down to 206. So if you set that as an alert and it does that breakdown below the previous day's low and you're short at 210 with $1 stop, what's that look like? You almost can't go wrong on that. So what am I going to do with Goldman tomorrow? Well, I'm going to take this little box right here and say that's about a 50-cent box. And I'm going to build 2 of those and hang that right above. So if it breaks, in fact, if it breaks above, I'm going to hang that 2 of those boxes on the open and treat that like the minimum manageable risk box. And why is that the case? Well, because that's when there's no directionality, that's how narrow the range is between the Z3s. So you want to be a little wider? Okay, we'll be safe. That's how wide it is. So here, I've done my prep work for tomorrow. So I'm going to bracket the open tomorrow with something that looks like that. And then whichever box it breaks out of first, there I go. So that's enough of it. That's what looking at the Dow got us. So here's the, let's take a look at the ETFs. You guys find that helpful? If so, let me know. And also let me know, is it helpful if as I start reading through the report and I see these sidebars and takeoff points, if that helps you see the connection between the idea and then immediately go frame it and then come back to the report. Yeah, that's otherwise you got to hold all of those ideas in your head. This way I look for the things that interest me and immediately go see if it's something that's any good. So here's some things that really stick out to me. There's a lot more of the ETFs that are ready to collapse if there's weakness tomorrow. So those would be my short side targets. And who are they? Mexico, industrials, Latin America, no surprise, Brazil, and metals and mining. And then the big winners today, I just noticed silver, 9%. Holy smokes. If only there was a leveraged silver. Oh, yeah, there is. That's right. There is. When silver cracks and breaks, ZSL is the inverse silver, by the way. But now take a look at gold. Had its big 4-period breakout among the, on the NDXs, the 10-day, 1 month, 3 months, 6 months. Healthcare, very strong. Materials, strong. Silver, very strong. We already know that from Wheaton. Wheaton gives you the best, essentially, leveraged blend between gold and silver. Just a handful of dojis. Surprisingly, the Qs were a doji. The whole energy sector, that was a consequence of a gap down. So that's oil exploration and energy sector. Not much else to see there. Silver, Pfizer, Walmart, gold. Yep. Goldman Sachs. I think we looked at that already, didn't we? Yeah, that's right. Oh, yeah. It's noteworthy that that's the only auto framer among the Dow 30 and the ETF 30. Home Depot. I mean, God dang it, Kenneth, just go buy it for crying out loud. That's me being, that's an example of some of the positive psychology self-talk that I engage in to treat myself with rigorous loving kindness. Dummy. Intel and JP Morgan. So that's interesting there that Morgan's on that list, but not Goldman. The daily squeezes, this is going to always be large when the daily range is small. Because what that says is that the whole market now is in a period of compression. Look how tightly compressed the S&P is and the Dow. Even treasuries are tightly compressed. This market is aiming for and the small caps, for crying out loud. This whole market is poised for an explosive directional move. So much summer. Well, of course. So what's not working? Tech is still lagging. That's actually a good sign because that says that If people start believing in it, there's room for that to really go. There's your names right there. These other things that are slowly starting to recover, there's U.S. Steel. Morgan and Sachs, lagging the other ones that are in the summer. Here's your big winners. I actually like this. That's, as I'm thinking about the core portfolio, the treasuries are not suffering. They're gaining as much as treasuries can. So I'm actually pretty happy about that. Let me go check in with that real quick. That's the daily on treasuries. That's pretty good. The weekly on treasuries is very good. In fact, that's getting ready to do a PSAR flip here pretty soon. And then you'll notice that the last time there was a, sort of a panic reaction, it was this. So don't pretend that treasuries are just the risk-free rate of return. Look, that's quite a 2-week period for you. But this is really more like the support level in here between the PSAR dots, I would say. And now that thing's getting ready to break out to the upside. Yeah. I like that position. Just another look at the NDX work. Wow, what a day today was, huh? Even treasuries and real estate. So real estate now looks really interesting to me because it's been a laggard, but even that had a big, nice breakout recovery. This is why Goldman is so interesting to me. I mean, just the anomaly of it. And Merck is probably suffering because it's not Pfizer. Here's Pfizer down here with its little virus vaccine, hooray. And here's Merck all suffering and lonely up there. Pair trade. That's basically everything I want to cover on the daily. I remembered yesterday the diagram I wanted to get to yesterday, and I couldn't. Those of you that listened in yesterday, I thought this was a really important breakthrough where I talked about. So I'm not going to re-talk about it. I talked about the 6 blind men looking at the elephant, and then why, if the one person can only know so much about the elephant, and then if you get 6 guys but aren't talking to each other, you can know 6 little separate segments, but there's no usefulness to it. It's only when they start talking together as a team, 6 guys on a team, that you start filling in the gaps of the elephant from all the different points of view. And then the size of your team is N, so that's a network, and the power of a network is in the connections times the quality of the transactions between the connections. It's 2 to the N times the quality factor. So that becomes asymptotic pretty fast. And so yesterday's important breakthrough was that trading is no different. You just replace the word elephant with the word trading, and now suddenly each one of those blue circles is a separate system or an approach. And it could be all inside your head. It could be 6 different traders. But if you're trying to get some synergy, then the collaboration between your systems, the overlap between your systems, is how you as an individual. So if that's you as an individual with 6 different systems that are not connected, you're only getting these 6 little buckets. But if you start putting them together in the way I've been trying to demonstrate with the hybrid, where you get this synergy between core, swing, and position in the logic change, you start filling in the pieces of the market mosaic. You start achieving something like a network effect just among your internal systems that you're tracking. But then if you get together in a group and each one of the guys in the group is pulling together their own little trading network, this really becomes a powerful force for good if you have these enablers. You have something like a tribe, which can produce a language, and then repeated behavior becomes your culture. And then your experience individually can be captured in stories from which you derive the concepts to talk about and then study to form a theory, which then can be applied to see if that theory is approximately correct. And at the same time, even if you don't go completely up the food chain towards science, something in this formation of language and culture and experience and stories is the roots of craft knowledge, which could become more professional. And if it becomes a profession, it could be certified and validated and then transmitted in a regular way. So all of this is sort of that walking man in his roundabouts coming together as a member of the tribe, sharing his experiences, and then the safety, trust, truth, and opportunity going forward. That's a pretty good set of skills in order to contend with a world of VUCA. Which is that volatility, uncertainty, complexity, and ambiguity, fully covered in the hybrid course. So one of the things that I'm going to take to that global decision-making initiatives group, because they like VUCA, I know, is I'm going to ask them, hey, graph what you think your VUCA beliefs are. Identify your beliefs, assumptions, and constraints. What do you think the shape of VUCA in the future looks like? So from the origin, VUCA up, time passing. And now pick whatever time frame you want, strategic, operational, or tactical. And then draw what you think your VUCA curve, your estimate of future VUCA looks like. That's a prediction. Do you have the same curve for strategic, operational, and tactical? So what if you were the blue line? In the blue line, VUCA today only starts increasing more and more and off into the future, kind of the naive simplicity of VUCA as a, this time it's different than it ever has before, and it's never coming back, it's just going to go. Okay, that's one way. Another one says, no, the VUCA today is like it's always been. It's this sort of conservative increase in the amount of VUCA, but it's manageable with some adjustment. This purple line sort of says, no, there is something like a cyclic wave of VUCA over time, and almost like a channel of VUCA between peak and valley, and then it's sort of like a metronome. This red one is something like the innovation curve, which says until it grows and grows, and then there's some kind of tipping point, and then there's a burst, and then it kind of levels off. So this is like the punctuated equilibrium, where you go forward in bursts of explosive transformation and then consolidation. And then there's this orange one, which is something like, holy mackerel, you get something like a bell curve of peak VUCA, and then it pulls back, and then you could say, I think it's going to be like the curve of innovation, and it comes up to this new higher quantum level and then levels off. Or no, it comes mostly back to the same long-term growth rate and then levels off. And this was just an era or a generation, but things return to the long term, or there's something in between. So that's 5 different pictures of what you think future VUCA looks like, based on, well, what are your beliefs, assumptions, and constraints and time frame choices? How would you draw that curve? Do you have a single curve? How would you validate that curve? How do you measure it? That's what I care about. Not picking the right one, but how do I distinguish between them? And could it start off as the green line and then become blue? I don't know. Said another way, from an operational level, if I'm just driving down the road with my semi truck, with my main body, and I'm just going, and the road is paved and good weather and daylight, and you know, just cruising along. Imagine there's some maximum VUCA fog of chaos that just heck knows what's going on. Maybe something like peak VUCA up on this chart. What's the approach look like? What's it feel like? Is there some now as you start driving through here? So this is a systems top-down view. Remember, there's some guy trying to make decisions every day in every increment. Is there some kind of warning signal that says, hey, bridge freezes before road surface, caution? And then there's some red line which says, oh, the amount of VUCA has started to expand. Because maybe this is the channel of VUCA that looks like the purple line. So I'm just kind of driving along. So what's my strategy to deal with this moment? But at some point I just declare, yeah, this is much more like VUCA than not VUCA. And so maybe I want to protect my main body and I'm willing to commit a quarter of my assets into various scouts that can help me navigate through this fog and lead me through back into the land of warning and then back to normal when I can just go. And maybe I can just navigate this. Maybe that is what it feels like if it's orange. Or even if it starts going up here, I don't even have to decide. As long as I know that it's above some threshold, it doesn't matter which one of those lines it is, orange or blue or red, because it's all the same uncertainty. So here's some different strategies. I might wait until I'm at max VUCA and then start some kind of spiral activity to explore the fog with my scouts. And then when I think I found my way, hey, we found a way out, then I can just go with my main body from here and then just go on that path. And so I'm not committing the whole main body to spinning around in circles. Think of the old Billy Preston song, We'll Go Round in Circles. That is a dumb way to go because you had to endure the entire fog of VUCA, fog of chaos, until you just stopped everything. This green one, you might just start going left and right and exploring the space, always moving further, but kind of tacking back and forth. So spiraling versus tacking. This is like a sailboat sailing with the winds of change and navigating through and kind of following the volatility until it starts narrowing down and then it comes back to normal. So that's more like sailing, I suppose, or surfing. This diverge and converge takes this kind of a model where I just say, I'm in the red zone, so I'm going to send scouts out along 3 promising routes and have them explore. And then as they become successful and it turns out which one of those 3 is the best one, then I'll call forward the guy who's been protected against it. That actually feels like what I'm doing with my core position is I'm just saying, I'm going to put that in cash and treasuries since I feel like I was like 3 Sigma successful. I'm just going to stop here, let the scouts go out, find their way, and then when they call me forward, the main body will come forward on that scouted path in an efficient way. And meanwhile, I'll just do some rest and recovery and some research and development on him, but not subject him to risk. So if you think there's something like fog of chaos and VUCA out there, what's it feel like as you're driving down that road? What are the warning signs? What is your mechanism for doing that? I know what mine are, and hopefully I'm giving you some different tools, like the 4 seasons of MACD is a way to sort of simplify this, or the risk Z, or the 10-day NDX, or the different multi-lens. In fact, the multi-time frame, multi-lens analysis should be giving you a practical set of tools to start doing what we do when things are normal. You just go buy Home Depot and just shut up and buy it. Starting to get, trade framing and swing trading and risk management, and now managing the fog of chaos in shorter, smaller steps. Like I've taken the core and the swing off the table while just the scouts were out doing the day trading and pulling us forward. And we're just starting to emerge out of that now, I think, with some of those that cautiously optimistic about the swing trades. But we're not even out of the woods yet, because that next 10% sell-off is just waiting for us. So we'll be ready for it. So if you take a screenshot of this whole darn thing, you could draw your curve. That's what we do if we were in the workshop. Then we talk about it and explore your beliefs and what's the evidence for those beliefs and how would you know if you were wrong and how can you hold more than one idea in your mind at a time. Well, this is where your working group is helping you with the elephant, which is the challenge of trading. And then yesterday's big insight for me especially was now if I just substitute self for that, each one of these is a perspective on my inner psychology. So I have to either master 6 different methods of self-awareness and analysis, or have 5 trusted friends who can give me feedback about what they see. And all I got to do is tell them what I see. And so this is how you go from self to the tribal approach. And then with a common language, culture, experience, and storytelling using these principles and the principles of the walking man, head, heart, gut, hands, and feet, connected through a series of true story roundabouts, off we go. And we can handle this. In fact, this is good. This is where we thrive in this period of time. That's what adaptive hybrid trading is. That's what I want to say. So, good work in the chat room again today. It's already late. I need you to prepare for tomorrow. So I'll get this posted. I will catch up on some of the tactical chart markology right now. But you guys have heard me do enough of that stuff that those charts are starting to speak for themselves. And I've taught you to look through the eyes of a coach. And that's where you get to reach out to others and maybe start engaging in, one-on-one or email exchanges, or use the base camp and collaboration area. There's lots of opportunities to do that. We've got models for how that works. Take a look at the Coaching 2020 workspace as a way to do that. Follow the leads of the Euro group to work and use that space for your own group work. If you got a group and you want to do that formally, just let me know and I can help you get that done. All right, guys, that's everything I got. I'll get this posted and published. The one from last night was a large file, and so it took most of the night. It was still 4 o'clock in the morning and uploading when I wanted the link to be in there. It just took all night to upload that. That's why some of you got the error message on it. So hopefully this one will upload a little quicker. Anyway, that's all I got. Take good care, guys. We shall see you tomorrow. So Van, that's a pretty good one, I think, for you to think about rendering in a pleasing manner. The colors really help, I think, with that. So just something for you to think about. Take good care, guys.